Us here on Editors Roundtable. We're talking about a bunch of things. Prashant spoke about, beyond fourth quarter. Sonia spoke about rural demand, as did Ashwini. But, the last 4 days for the FMCG sector have been worth months of news. If I just take a look at all that's happened, and earnings are one part, beyond earnings also a bunch of things happen. So, as far as the earnings are concerned, we're midway through the FMCG earnings along with the earnings season itself. But we have important trends here. The top of the block this time around, the best results have come by in the first week of the earnings season itself. And they've come in from Nestle, highest growth that the company's posted in a quarter in the last 1 decade. At the same time, Tata Consumer beat expectations across all parameters. So those two were the pick of the season in the FMCG space. Mixed results coming in from HUL, 4% volume growth. Could have done mildly better. Titan as well. They prepared the street for strong growth in the jewelry business, but eyewear margins were a bit of a miss. A complete miss this time around was Dabur. Post the miss on, muted revenue growth of 6% over the last 4 years, you had margins missing estimates as well. The management commentary also did not inspire much confidence. We had brokerage downgrades come by as well. So that is one miss that came by. But what was the, positive surprise were these smaller FMCG companies which were trading sub 25, 20 times price to earnings. Bajaj Consumer, case in point. I mean, 14% growth in their revenues, 80 basis points improvement in margins, as a result of which net profit also double digits. Stock trading at 14 times. Jyoti Labs, for the last 4 quarters, the stock has been consistently, performing well every quarter. So 13% revenue growth, 430 basis points expansion in margin, and guess what? 60% jump in their profit after tax as well. So these were the results that came by, but beyond results, the big deal that happened. Godrej Consumer saying, acquiring Raymond's consumer business, Park Avenue DOs, etc. The street is concerned about why Park Avenue DOs when you can start your own Synthol brand, or why pay top dollar, as a result of which, why pay so much valuation for it as well? And when do you get that money back? What's the scalability out there? The other one, Nestle, we spoke to the management and everyone's, talking about Ching's acquisition. They said everything's still on the table. Nothing's off the table. So that's something we'll be monitoring. In fact, that is something that we'll be monitoring as a theme for the FMCG sector in this year itself. One is margin expansion because raw material prices are coming off, volume is picking up, and second is M&A because our company is now chasing growth via the inorganic route because rural demand is just showing gradual recovery. For all of this, we're looking at valuations. FMCG never traded cheap, but currently it's actually pretty much in line with the 10-year average. So it's not very expensive either compared to its 10-year average, and the ones which are priced cheaper are actually outperforming. So is there a case for some shift in to the B zone FMCG players, the kinds of Bajaj Consumer, Jyoti Lab? Imami is one of them. So that's something we'll watch.
At least for this quarter, you know what they said, Mangalam, Jyoti and Bajaj, apna time. Apna time aayega is what they said. Sorry.
But next time you talk about noodles and all, you better get us some. You can't just talk about it and get us all hungry and then not come with a plate of Maggi.
Nigel and I had noodles just before the show.
Just before the show.
Thanks for not sharing with us.
I told Nigel. Nigel presumed that Sonia will care about
diet and she'll be having those
organic.
I think what we need to do is get Nigel into the studio. I think there's too much fun happening outside.
The fun's best always outside the studio, right?
Let's get in Ashwini's comment on this FMCG pack before we wind down. Ashwini, Mangalam put together the numbers. What's your view?